All right. Speaking of what is happening in Europe, stocks there have seen their second straight day of gains after France, Spain, Italy, and Belgium announced a ban on short selling. Well, for a look at how the decision will impact the European economy, we're joined now by Barry Bosworth. He's a former advisor for President Carter, and he's now a senior fellow for international economics at the Brookings Institution. Barry joins us live from Washington, D.C. Barry, good to have you here on InBusiness on this Friday. It's been a market that has been filled with gyrations, and clearly that short selling announcement yesterday helped both the U.S. stocks as well as European stocks overnight. But will this be a temporary impact? Do you think a short selling ban is the answer to their woes?
No, I don't think short selling is going to solve the problem. There's just a huge amount of nervousness in financial markets at the present time, and nothing is going to be done in the very short term to reassure them.
What should they be doing? When we talk about President Nicolas Sarkozy and German Chancellor Angela Merkel, they're meeting next Tuesday. What do they need to do or focus on to sort of stabilize the markets there and stop the rumors and stop the fear?
I think they need a much more transparent mechanism of doing something about relieving the debt on both of, now it's turned out that Italy's another country. But the central bank is buying up this debt in the market, trying to hold down the interest rates. I don't think that's a sustainable long-term policy. Instead, they have to have a broader Euro country group on this economic stabilization fund. They have to increase the size of it and convince investors that the rest of them are willing to stand behind these countries. As long as there's uncertainty.
I'm sorry, I didn't mean to stop you there, but actually I do want to drill down on one of your points here, because you say the ECB going in and buying the debt of specific countries is not the answer, but having a Euro bond or a united bond would be. Explain the difference and why having a single Euro bond would work versus buying individual country bonds.
The responsibility of the European Bank is to maintain price stability and economic stability within Europe. It's not supposed to be a bailout mechanism for governments that are in trouble. So when these governments are in trouble, the real issue is what will the other countries inside the Eurozone be willing to do to help? They have been hesitant because their own citizens don't want to bail out these other countries.
They have been. Certainly German citizens have been. We have heard that sentiment there from that country. But will they be, are they amenable to having one single bond to cover the entire region?
I think they're going to have to, because there's just a huge difference in the interest rates that a country like even Italy would have to pay. If the bond is an Italian bond, investors are now questioning it. If it was a Euro bond and then reissued back through the Euro community as a whole, the interest rates would be dramatically lower. Italy could easily afford those financing problems. I think the concern on the other side is that the Italians will interpret that as reducing the pressure on them to do something about their fiscal deficit.
Do you think that's on the table for next week's meeting?
I think some expansion of that fund is the primary issue that they have to deal with.
Let's get back to transparency. Many people are concerned with the exposure that French banks and the French government has to overseas banks, to Greece's banks, Italy's as well as Spain's. Why don't they become more transparent? Why aren't they releasing more of the numbers? Is it because their exposure is much greater, do you think?
No, I think that's just a reluctance, traditional reluctance to be too open about these sort of things. Regulatory agencies are used to keeping it private. We don't really know how bad off the banks in France are, but I think we do know enough that the French government is actually in very good condition. And these rumors about French government seem unjustified. They're a much stronger fiscal position than the United States is, for example.
Well, opinions on this are very divided. Clearly, the ratings agencies have come out. They've affirmed their ratings on France's sovereign debt, but the markets are suggesting otherwise. Credit markets are, in fact, we're seeing those credit default swap spreads on France in particular widen out quite dramatically over the last week. Why? What do the credit markets know or don't know that the ratings agencies and the economists do?
I think basically they're speculating. They're looking for the next country in line. This is a very thin market. And if they had more information and were sure that the French government was not going to be sucked in to have to bail out its own banks, I think that's a significant issue at the present time. So if they could release more information telling people about what is the financial condition of the French banks, that would indirectly then relieve the pressure on the French government as well. I don't think the concern can possibly be the French budget itself. It's got to be, are they at risk to have to bail out their banks?
Barry, do you think that we're at real risk of sort of a self-fulfilling prophecy? We're talking a lot about liquidity drying up for some of these French banks. There's been a lot of talk about the repo markets becoming increasingly more expensive for European banks overall in the last week. Could that push them over the precipice, if you will, and sort of force the economy there into a much weaker position?
I think that that's become a significant risk, and it exists because the governments have consistently taken baby steps when they need to take giant steps. If they acted more strongly, they could relieve a lot of this speculation. I know it's hard for citizens in France and in Germany to be sold on this, but they have to realize that if these other countries continue to deteriorate, their own economies are going to start deteriorating. So they really have very little choice. And if they act promptly, I think they can probably get all their money back.
All right, Barry, we are going to have to leave it there. Thank you so much for joining us on this Friday morning. That was Barry Bosworth, a senior fellow at the Brookings Institution, with his take on what is happening over Europe and what they need to do in order to calm market fears.